Hello, everyone. Welcome back to the Security Conversations podcast. If you're hearing that music, it means that we are now rebooting the one-on-one interviews that I started doing on the Security Conversations feed, in addition to the Three Body Problem podcast that we'll continue to do on a weekly basis. So, welcome back to our one-on-one show. My guest this week is Sid Trivedi, a partner at Foundation Capital. Sid, let's start right there. What does a partner at Foundation Capital do?
We invest in startups, Ryan. I mean, that's the job, and it's to go and find the companies. In our case at Foundation, we do it really at the earliest stage. So typically, we're coming in pre-revenue, sometimes even pre-product. 80% of the time, we come in at the seed stage, and then about 20% of the time, we're at the Series A. But we're usually either your first or your second check.
You're investing across the board. It's not only in cybersecurity companies across the board. I know you guys were very early in Solana. Give me an example of some of the companies that people, the audience, will know about that is in your portfolio.
The one that most will know about is a company called Netflix. We were, the first investor back in the late 90s in the company.
In the DVD days?
In the DVD days. Yeah, one of my partners who's now retired was one of the investors in Netflix for us at Foundation. Obviously, ended up being a great outcome, and most folks don't remember this, but Netflix had multiple different iterations as a business. You remember, Ryan, that the DVD business, then it went into kind of over the top content, and today it very much creates its own content, not just a distributor, but an actual creator of content. And I think that's a great example of companies having to constantly evolve to stay up on top. So Netflix is a good example. ForgeRock, we were early investors in ForgeRock. Venafi, we were early investors there. I'm wearing a hoodie for CloudKnox, one of our companies, which was acquired by Microsoft. So several different players from
very active in cybersecurity as well, right?
Very active in cyber. We made our first cyber deal made our first investment in 2001. So some time ago.
Have any of your companies ever made it to the final or won this RSA Innovation Sandbox?
We've had a few that have made it to the final. I have to winning it. I think Oliver did win with Phantom. So I would say, when you go back in time,
This is
there's
Oliver Friedrichs, obviously.
Oliver Friedrichs with Phantom. We've
And
had a
who's back
few.
with Pangea? Are you guys in with his Pangea company as well?
Unfortunately, we're not in Pangea. And, Oliver and I chatted about it during the pandemic. Oliver and Sorba, both good friends of mine. They felt at the time that they were coming up with the idea that it might compete with Skyflow, another company we did, which
Right.
leveraging. So kind of what if privacy had an API, basically an API access to your privacy vaults. When Oliver and Sorb were coming up with the idea, they had this concept of leveraging API in cyber, and Skyflow was just very early. And they felt like, hey, there may be some conflict. Today, there is zero conflict.
Right.
I think they were freaking out for no reason, but I understand. Sometimes founders think something will be conflicting and it won't.
Yeah, I kind of mischievously asked about the RSA Innovation Sandbox because obviously I wanted to pick your brain on the big story in your world is RSA changing the rules for its Innovation Sandbox this year and mandating that every one of the 10 finalists receive a $5 million investment in the form of a SAFE. Are you sending out an email to all your portfolio companies telling them scramble and get your submissions in for this sandbox? Like, how are you guys viewing this? Because the jury is still out on how entrepreneurs, investors, companies will react to it. What was your first initial take when you read the news?
When I first read the news, it was just curiosity. I think it was just, wow, this is something that has changed in a program that has been successful for 20 years. I think they're now celebrating that 20th anniversary at the Sand.
We're gonna get into whether it was successful, but go ahead.
I think I had this question on, hey, what does this mean? And then really it went from kind of curiosity on, hey, what is this, to really learning and understanding what are the terms, what's the structure. Obviously, we don't know everything, and I don't think we will know everything. We'll find out over time. So it was just figuring out what this means.
Do you feel they've been fairly transparent with what they've released?
I think they have. I mean, the funny thing is we won't know until these investments are made, and then we'll realize, oh, they got us or something like that. But it doesn't feel like they're trying to create gotchas. I think they're trying to be very clear. If you go to the website, they have the information on what the terms are of the investment, the uncapped safe, the fact that there's a discount that's a sliding scale discount from 5 to 25%. They have the side letter. They highlight that the side letter has kind of two core parts to it, a part around pro rata rights and a part around information rights. I
You're
think
going way too fast because I want to dig into it individually. Can you just set the stage for the audience? And a lot of our folks are not really VC people and understand your fancy investments, Silicon Valley language. What is a safe and what is an uncapped safe? And this is a norm. Help me understand if this is a normal thing that investors normally do.
so. I think, yeah, let me, that's a lot of questions. So, firstly, what is a safe? It's the simplest form of investing in a startup, and it was created by Y Combinator, the very famous accelerator. And then the primary goal for why they created it was to find a way to create an instrument that didn't require a lot of work with lawyers and for founders to get confused on what are the terms.
And I should just spell out SAFE is actually an acronym for Simple Agreement for Future Equity. So I think that kind of boxes it into the explanation, but go ahead.
Exactly. And there are two pieces of a safe that are really important. There's a piece around kind of valuation, which is
Mhm.
what is the upper band of the safe? A safe. What is the max valuation? And usually that's created through a cap. In the case of the sandbox, they are making no cap on it. So that means it'll convert at whatever is the future equity round. To Ryan, your point, the fact that a safe is effectively like a convertible note. The differences, and we don't need to go into details on what the differences are, but it basically says when you raise a real equity round, we will convert at that round.
Right. And one of the things, there's a valuation cap, no valuation cap. What are they typically capped? Is this
Yes,
a
they are.
departure? Okay.
So they're typically capped, and they're typically capped at some specific number. The second piece is there's what's called the discount, which
Yes,
is
the
in the
sliding scale discount. So in the future, based on the valuation, I'll get an X percentage discount on that. And explain this sliding scale thing, because I think this is a crucial part of helping entrepreneurs or small companies understand whether this is something they want to play in.
Yeah, I think that the reason that they made it sliding scale in, I don't want to speak for RSA or Crosspoint, but my assessment on why they're doing this is because they have chosen not to put a valuation cap. And they're actually doing that to help founders. They're basically saying, look, we don't want to price the company when it comes into Sandbox. We'll let the market decide, the lead investor of the equity round decide what the value of the company is. We just want to be part of it in some way. But they do need to figure out some way to benefit from the fact that they're giving the money today versus in the future whenever that equity investor is putting in money. And the way that they're doing that is by creating a discount. And typically the discounts are not variable, they're not sliding
They're
scale.
typically 20% discount, right? I
They're
mean,
typically 20%.
20% is kind of the average, the typical thing for these safes.
That's correct. Now, typically there's a valuation cap and the 20% discount.
Right.
In this case, because there's no cap, my guess is what Crosspoint and Sandbox and RSA
Slow
are
down a
thinking.
second, because let's tell the people Crosspoint is an investment company. It's a private equity company that bought RSA several years ago. And so I just want to put everything into context for the audience. When you mention Crosspoint, these are the folks who own RSA Conference.
That's correct. They are
Right.
one of the core holders, they're the majority holder of Crosspoint, of
Of
RSA.
RSA. Spent a lot of money for it as well.
They did. So I don't think that information has been disclosed, what the value of RSA Conference was. So they haven't,
But
they
that was
haven't
a big
shared that.
deal. When they
It was
did
a
that
big deal.
acquisition, it was a very, very big deal. And I want to bring all of this up to kind of put their what's their skin in the game here. Like
For sure.
why this change, Crosspoint trying to get, Crosspoint making their moves to get into it. But let's finish up on the sliding scale thing. The idea is, as I understand it, the scale is determined by how soon after the sandbox you close your round. Help me understand why that timing is important and how the scale works.
The reason it's important is just imagine yourself investing in any company. And in this case, you're not getting the value, the price that you're making that investment in. You're just giving the money up front. Now, if you're giving the money up front, you want something in return for your time, particularly if the company, they give $5 million. That's the amount that Crosspoint and RSA have decided per company. They give the $5 million right now. The company chooses not to raise after Sandbox. Maybe they wait a year or 2 years. Now, the value of the company has increased in that period of time. And what they're saying is they want some level of discount to whenever that next round is raised and the safe converts at that next round. They want to have some type of way of getting more value for the more time that's gone by.
And the longer that you take to raise, the bigger their discount becomes.
Exactly. So it starts at 5% for under 90 days. So in the first 3 months, and then it goes all the way up to 25%.
Right.
And that I think is over a year, if I'm
Over a year,
correct. Yeah.
360 days plus they get 25%, which is just a 5% above what the standard 20% discount is.
Yes.
So it's not that crazy either.
It's not crazy in terms of terms that you would see in other places. That's correct.
Now let's get into the real nitty gritty. The real nitty gritty is in this pro rata rights. I haven't read the side letter. I know the side letter is available for download. I had to go create an account to get it to download and so on. And I don't want to get into the details of what their pro rata means, but I want entrepreneurs to understand what that is and what the implications are.
That's correct. And you know, Ryan, the funny thing, which is very interesting, I haven't talked to RSA Conference about this, but I did notice the same thing that if you want to download the side letter today, you have to create an account. That was not the case the day that this announcement went out. There was no
So
requirement.
they're doing some data collection on the back
Exactly. I
end.
think they're trying to figure out like
Who's interested?
signing exactly,
Yes,
which is
bastards.
great. To be honest, it
Great
actually
for
tells
who?
us
Great for who?
it's great for everybody. I think it means that RSA Conference is trying to get some more information to try to assess like, hey, is what we pushed out right? What's the feedback? I think what they're trying to see, Ryan, is they're trying to assess the same thing you and I are trying to figure out, which is how many
How are
people
people viewing this thing?
exactly how many people value this, and then what ends up happening? Do those folks apply once they see that document, and what does that tell us? Which is
Okay.
very smart. I think
Have
that's
you seen the pro rata rights? Have you downloaded it at all?
I did download it. I haven't read all. It's multiple pages, so I don't want to try to indicate
Okay.
that.
So let's slow
That I
down
know
and go
every part.
slowly for the folks, right? Because I know this is a very topical issue. Explain pro rata rights.
Basically, in the most simplest of terms, without going into legal
Don't
requirements.
confuse me.
Yeah,
I'm
I'm going
very
to try to be
simplistic. So
as simple as possible, which is that when you raise your future round, the pro rata rights allow you to invest in that future round to try to buy back the equity that you lost as a result of additional dilution
this
that was
is an
impacted.
anti-dilution move. You're making
Effectively.
sure, like, when you raise in future rounds, I don't get diluted. I get to come in and maintain make an investment to maintain my equity position.
Exactly. You still have to make the investment. You don't just, it's not anti-dilution the way that traditional
Right.
anti-dilution works, which is that you get more equity just for free to maintain your ability. It's a way of saying, hey, you won't be impacted completely by that dilution. The same way that the founders are fully impacted. When there's a
Right.
round that's raised, they don't have pro rata rights. They can't make more investment into the company to try to get back their equity.
Is that a red flag?
No, it's not. I mean, it's just every venture firm has pro rata rights if they're leading a round. I think the red flag of it is that typically you don't see this happen with safe notes where when there's a minority investor. Now, I
Right.
think what Crosspoint would argue is that, well, we're not investing 100 or 250K, we're investing $5 million. This is not a small amount, and typically anybody who is investing 5 million, they would have pro rata rights.
Okay.
Yeah,
So
I mean,
typically in a seed stage investment like you make, you're
exactly.
maintaining your pro rata rights, even if it's a $3 million deal or a $5 million deal,
Exactly.
right?
Yeah, imagine one of my companies that's currently at the seed stage raised $6 million. Foundation has invested $4 or $5 million in that company. They go into Sandbox, and
Right.
Crosspoint puts another $5 million investment as part of that. Well, look, they're going to argue and say, well, Foundation has the priority rights. Like, we've just invested as much as they have. We deserve that.
They're not taking a board seat, which is a green flag.
That's a good thing, yes. And they shouldn't. I think if they did, it would be a very difficult thing for anyone to buy.
They're asking for information rights. Now, is there a conflict there when they're investing in 10? For instance, they're going to be investing in 10 companies. It's not $5 million, it's $50 million. I know for Crosspoint, it's a drop in the bucket. These are tiny, tiny amounts in the grand scheme of things. But you're investing in 10 companies. Over 5 years, it becomes 50 companies. Now, suddenly, everybody's competing with each other. There is no real innovation in security. Everybody's just copying each other anyway. Is there a risk? Is there a risk at all there with this information rights? And can entrepreneurs push back at all on some of that?
There is a risk. Can entrepreneurs push back? I mean, the document is quite clear. This is, you have to take this if you are a finalist, and if you don't want to take this, then don't apply. I think they're quite clear. There's no terms for negotiation on this. I think what'll be interesting to see is how do they react if there are multiple finalists who are competitors. And imagine a world where there's 3 companies
Correct. Let's say
out of the
Wiz,
10 that are in
Orca.
identity. Yeah, or cloud security. Exactly.
What happens in that? Like, how do you manage this access to information rights in a world where it's super competitive and and you're invested in all of these guys?
I don't think they've thought that through. That's my assessment. Or maybe they have thought that through and they're just not yet sharing that information with us. And that's okay, to be honest, in that, like, it's just they don't need to share every specific detail. What my hope is, and my view is just looking at how RSA Conference has worked over the years as a community, I think they will find a effective way to manage this. Because if they don't,
You're bullish on this.
I'm not
You
bullish on.
sound like a defender of this sandbox thing, and I want to get
I,
into a little debate with you about even the value and merit of this thing to cybersecurity as a whole. I know you're going to represent the VC interest, obviously, and I bring that up because one of the things RSA has held up as their flag is that Innovation Sandbox finalists have raised an average of 30 million at 3x step up valuation in their first subsequent financing round after becoming a finalist. They're taking credit. At least it reads to me that they're saying, hey, you appear as a Sandbox finalist. Chances are you're going to get your next funding round. Is that a fair assessment? I mean, just based on the history of you looking back with your historical knowledge, is that accurate?
I think that is accurate. I think that the Sandbox is very consistently, it's one of the few programs that has consistently shown that it has created value for the people who apply, who make it to the finalists. And you know, am I happy with that? No, because I think that in the past there have been decisions made on judging, there have been decisions made on picking the
Why
winners.
are we taking this innovation sandbox so seriously when there were VCs sitting on the judging committee? I mean, like, come on, Sid. In fairness, I mean, these guys are your friends, and I'm don't expect you to go too hard on them. But maybe I can ask the question, like, why is Barmak a judge? Why is Patrick Heim a judge? Why are there Israeli VC judges there? I mean, no knock on these guys. These guys know more about this business than I do, but isn't there a clear, obvious conflict of interest? And if it's a clear, obvious conflict of interest, why are we as an industry taking this thing so seriously?
I mean, all those folks are friends and great investors and great thought leaders, and
No
both
disrespect
to
meant
you and me,
whatsoever.
both to you and me. I don't know why they are there. But certainly, I was not involved in deciding the judges.
You agree with me though that
I agree.
that's not a
Look, I
good
agree.
look.
I agree with you. And now the funny thing is, if you look at the judges for 2025,
They changed it.
they've changed
They've
it.
all
So
gotten kicked out,
there's
and
no
that's why I
VCs. So
brought
I
it up.
think, look, I think they've, to their credit, they have taken the feedback
Come on,
that you
you
highlighted.
give
I
people
think they
too
are.
much credit, Sid.
Hey, look, I think that they're trying to factor in these things, and I give them a lot of credit for making the changes. And you're absolutely right. I think when people do the wrong thing, we should speak up. But when they do the right thing, look, we should give them
And
credit
why? Okay,
for
so
doing the right thing. And
let me ask the question this way, because I'm a purist and I'm really just kind of an outside observer. I have no skin in the game. My question is, why do we trust RSA to do the right thing now, when for years they've had this conflict in place, and it's just this incestuous thing that happened on stage? All the same friendly CISOs came along, and it's just this ugly, murky thing where the incentives are all skewed. This is the reason we have a cybersecurity disaster on our hands. Like, we're not getting help from the VC world. Is that fair, or am I being too harsh?
I think you're being look. I think you're being harsh in some ways. Just imagine the number of people who didn't know anything about cyber, and because of the sandbox and because of the learnings from those companies and the whole experience of kind of almost like a Shark Tank experience in this big hall in Moscone, they've been more excited about cyber.
Popularity contest isn't going to save us, though, right? I mean, popularity contest is going to build companies and get people,
Yeah, and
make
that
people
that
wealthy.
long term, it will save us. I my view is that we will find everyone has their different way of kind of getting cyber to top of mind for the average population. And I think, to RSA Conference's credit, the sandbox has helped to do that. It's not the average person on the street, but it is making more broad software investors, broad leaders in software operators excited about companies and particularly startups innovating in cyber. I mean, candidly, before, just let's go back like 10 years ago. If you were a founder starting a new cybersecurity company, it was really, really hard to get CISOs to care and spend any time with you. And what Sandbox has done is it's given a stage to a subset of startups.
I'm skeptical. I don't want to make this into a big fight, but I don't understand. It's a world that is very difficult for me to process when it's so incestuous and it's there's just so many conflicts all around. Like this, do you think this democratizes funding? Do you think this $5 million per
No, I don't.
finalist?
I don't think it does, and I do think what it will create, if it works in an effective manner, is it'll actually, you mentioned the $30 million number, Ryan. The kind of the average round after Sandbox so far for those companies has been 30 million, a
Hmm.
3x step up. I think with this investment, it may go up. We may be in an environment where that 30 million, we look at it 3-4 years down the road, it'll look like 50. And that, I
As a
think, is the
haves, you're
opposite.
creating a haves and
Exactly.
a have-nots that are like even worse than we have it now.
Yeah, that would almost in some ways be the opposite
And
of
RSA
what's
is our bellwether. I mean, this is the bellwether event slash
it
thing that
is.
the industry kind of comes into San Francisco and we celebrate and we do our showcases and all the demos happen there. RSA is the business of cybersecurity. And now that they're taking an investment stake into companies and we have all of this, do you expect this to have a positive long-term effect
I
or a
do.
negative long-term effect?
Look, I think long term, the sandbox has helped us, and I continue to believe that it will. I
Us.
mean,
Who's
just let
us? Who's us?
us as a community,
Okay.
broadly in cyber. I'm not even being specific on investors or founders or customers. I mean, let's just look at the last two winners. You had Chris Tito with Hidden Layer. I mean, Tito was not known before Sandbox. I mean, I was one of the few people who had met him and had looked at the seed round and unfortunately not won it because of valuation
There
to
is
10,
no
11.
guarantee that winning the sandbox makes you a successful company either, or even appearing
Absolutely.
as a finalist, right?
There is absolutely no guarantee, and there are lots of companies that have not won, sorry, that have won and have not done well, or have been a finalist and have not done well and haven't ended up anywhere. But the reason I wanted to highlight Tito is just, I mean, he is not out of central casting in cyber. He did not have the type of access before this. I mean, Tito has been very public about this. He spoke to over 150 investors to raise his seed round. Now, his seed round ended up being competitive at the end, but it took him forever. I mean, he talked to random people and didn't really know what investing was like. He was based in Austin. I mean, he was
And you
the
think
opposite.
the sandbox changed things for him in that significant way? He had already raised this round before he got to the sandbox.
He raised a small little seed round. And yes, a few of us who are specialists in cyber had met him and thought very highly of him and thought very highly of the idea. But post the sandbox, the number of people who were calling me, Ryan, who had never heard of this company, had never thought about it, in broadly investing in broadly operating businesses and saying, "Hey, I've heard of this company, Hidden Layer. I noticed you're connected to this man. What do they do? What do you think about it?" I mean, it just shot up, and I mean that's fantastic. Like it's probably the best thing that could happen for somebody like that. And even with the most recent winner, Reality Defender, very similar. I mean, that team was not out of central casting. It was not known in the cyber world.
But if I ask you who got second place last year or third place the year
It's
before
harder.
or who won the year of COVID, nobody knows, right? Like
Yeah,
that's my point. This is not the Academy Awards where we know exactly
it's
who's
not.
the winner every year. I mean,
It's
and
not.
again, like you said, there are no guarantees.
It's
Uh,
not. And look, the thing we're not thinking about is Crosspoint could make these investments and then realize actually that wasn't a good decision. We don't yet know. I think they're looking at prior data, historical data, and saying if we had X million dollars in these, 5% of these companies, we
Correct.
would
They
be
want
very
to bite
happy.
the biz. Wiz was there. They want to be
They were.
make sure they're getting a bite of whatever the future of the next big thing is, right? I mean, it makes
Exactly.
sense.
If Sandbox stops picking the right stuff, then they're not going to get that
But
advantage.
sandbox is not a determining factor on a winning company. A winning company for Wiz was because they had good technology
A
and it
hundred
demoed
percent.
well and people bought it. I mean,
100%.
this idea that you
Hundred
appear in
percent.
this sandbox and you get a $30 million round immediately after is just so mind blowing to me. And I don't understand why this is like a narrative and a message that we should just kind of absorb and move
I
along.
agree with that. I don't think that companies become successful because they're at Sandbox. There are lots of companies we can talk about that were not in Sandbox that have been enormously successful in
And there were a
cyber.
lot of turds in the sandbox
There are
as
a
well.
lot of turns, and just like look, there are a lot of people who've gone to Harvard. Some of them are incredibly successful, some of them are not.
The
But
incentives though are so skewed with these popularity contests and the people taking investments. Did the 5 million number surprise you? I
I
thought it was
did.
a big number.
I thought it was a big number too. That did surprise me, and I think of all of the different things, that's the piece that is probably the
Why
most
is it
surprising.
dangerous?
It's just a lot of money, and if the valuation isn't super high, then it's a lot of ownership that's being given to Crosspoint, who are not going to lead the round, who are not kind of taking a board seat, who are not a traditional mid or early stage investor in
Is there
venture.
a is there a worry about jumping into the sandbox now and not knowing if you're a good fit with Crosspoint? Fit with your investor is important. I've kind of helped a couple of founders do their road tour with investors, and they get off these calls and go, that guy could never be on my board. I could never get along with that guy. There is that real risk there. Are you cautioning folks in your portfolio companies to take a close look at that, or you don't worry about fit?
I worry deeply about fit, but at the same time, Crosspoint is not leading this round, the
Yeah, but
subsequent round. They're not sitting on the board.
they're putting $5 million cash with information rights and pro rata rights, and
For sure.
it's not a small amount.
It's not a small amount in any way. And I think that part is scary. But at the same time, whenever I look at it, I'm trying to weigh the benefits with the harms. And here, the benefits very much outweigh the deterrence, the harms, the issues that we may face.
Really, you feel that way. So you're encouraging your portfolio companies to take a stab and take a close look at this. You're not discouraging them because of this
Exactly.
change to the rule.
I think that it's more the latter. I'm not discouraging my companies. I'm not sitting there and saying, wow, because we're getting this 5 million, let's go out there and do it. The main point I'm saying is, look, based on the information we have today, I would not do the sandbox purely based on this fact.
What would stop you from doing the sandbox? Like what is a red flag in this that still sticks in your craw as something I really need to get clarity on?
I think the information rights, which you brought up, I mean, that I would really like to understand and just understand what happens if they have conflicts. Maybe they make another investment that's not in sandbox. Do they give up the information rights? How long do they have the information rights? Over time, obviously, they will, as the company becomes larger and larger, at some point, you may not want to share a lot of information. I think understanding a little bit about kind of, is that quantum fixed, that 5 million number fixed, or is it variable? Today it looks very fixed, but could that change?
Right.
Because certainly what you don't want to do in some ways is you get the 5 million from Sandbox. Then you have an amazing investor that you'd love to add to lead your next round, but they don't want to pay a certain valuation. And in that scenario, Crosspoint will end up owning a significant part of the company.
Right.
That's a very difficult position. My sense is that some of these things they probably have thought about, and I'm sure there's some level of wiggle room that they aren't sharing with us. That is probably something that they can kind of look at from on a, you know,
Are your peers as I wouldn't want to say optimistic about it, but you're generally positive about it. Are your peers and your folks or other VCs viewing it the same way like you do, or you're hearing a lot of blowback on that side?
it's funny. There's so much going on as the kind of the year comes to an end. So many different investments, so many different things that people are looking at. There's M&A propositions. Candidly, it hasn't even been top of mind. When I
Right,
speak
right,
to
right.
VCs, no one is bringing up, hey, there's this thing, Sandbox, that made this change. What do you think about it? What are you advising people? The submissions they're not even taking submissions at the moment.
Right. They actually said there will be information on the submission process to be released later on. So it's
Yeah,
obviously going to have some sort of modification and change to how it was previously done.
exactly. I mean, I did last week. I pushed out a LinkedIn post, kind of just getting some perspectives, and certainly there were a lot of comments in that LinkedIn post to people who are pro, people who are con, and some of those were investors, and some of them were not as excited. And what I haven't done is actually had a conversation with individuals to try to assess where do people really think their opinions are. And I think we're all just trying to get enough
Right.
information to make an assessment.
And on terms and so on, this is no different from Y Combinator and the equity positions they take and the safe, how they set up their safes in their early stage rounds, right? Like, I mean, in fairness to RSA, they're not doing anything out of the ordinary.
It's funny. I have not looked at the how the YC safe has evolved, so I don't want to speak for exactly that answer.
Right.
I don't know about the pro rata rights. I don't know about the information rights with YC safe, and it's probably something that's worth checking. The quantum of investment is definitely very different. Crosspoint is putting a lot of money in just 10 companies. YC puts a lot less money in hundreds of companies
Right,
every
right.
year. So very different kind of
Yeah, take a
focus.
big equity stake though, I mean.
Exactly. So I think that's slightly different, but everyone has a different approach to this.
All right, let's switch gears and give RSA. The RSA people are very upset with me with the tone of my article, and the only thing I said was basically the jury will be out on how investors and their companies view this thing around fit and so on. So we'll see. We'll see how it works out. I'm curious and fascinated. One of the things the RSA Innovation Sandbox people are promising here now is also this kind of CISO engagement strategy where they'll give you mentorship and they'll give you access to their amazing network and so on. I bring that up because your world has been rocked pretty recently by a big article coming out, originally out of Israel, and then Forbes did a big follow up piece on this Cyberstarts. Is it Cyberstarts?
Cyber starts. Yep.
Cyberstarts, the Gili
Ra'anan.
Vernon, I want to describe it properly because I want to like just have an honest conversation about it. Controversy and accusations around pay for play, CISOs being paid, and security leaders being paid for bringing along portfolio companies. Now, it's pretty normal for every venture capital firm to have an advisory board full of CISOs. I'm pretty sure if I go to your site or ForgePoint site, there's a list of names and so on there.
Yeah, we
Did that?
don't. We actually do not. But you're
You don't.
absolutely right. Many of them do.
You have
That's
never
correct.
done it, or you
We've
just
never
remove
done it. We
names?
don't. We don't know. We don't. We've never removed any
There
names. We
is
don't
no
have any.
Sid Bucks.
There's no formal. Obviously, there are lots of people that I know and I talk to actively, and we host events and we spend time with folks. But we don't have a formal board, and where there is no pay to play at Foundation.
A big part of your world, though, is securing design partners for especially in your world where you're going in very very early
Yeah.
seed stage companies, and securing design partners requires good solid relationships with those CISOs and so on. Did the controversy around this pay for play and getting CISOs mucked up their names and that did that affect you in any way? I mean, did that affect the whole of cyber, or are you guys just pointing and laughing at the Israelis?
Look, and none of us are, at least I'm not laughing. I think that this is unfortunately a difficult position for everybody involved.
Like
It's
every
difficult.
VC wants to have a CISO portfolio that they can count on to not only buy the software but give this kind of feedback and embed the product. Like help the folks understand that relationship.
Yeah, I think it's a good question. I think that firstly, I don't think every VC is really focused on that. I think some VCs just want to make good investments and hopefully generate enough returns that they can continue to keep the lights on and operate as a great fund. Now, some VCs believe that one way to do that is to have these CISO advisory boards. I think the biggest question is just what do CISOs want?
Do you find any conflict at all with CISOs
I,
sitting
I,
on vendor advisory boards? And you're just your own personal opinion.
yeah, look, I do. I certainly, I think it's difficult. Now, I will argue in saying if a CISO and their company are a core customer of that vendor, candidly, they should be on the advisory board.
Okay.
Vendors want customer advisory boards. They want feedback from their customers. And the only way to do that is to get those folks to be involved. I think the complexity here is having advisory boards in companies before that sale has been made to help to make that sale happen, which
And
is
having carry though, I mean, like having an actual a stake in what happens to this company when you're responsible. You might not even be the one. You might say you recuse yourself from buying decisions and you remove yourself, but your team. I mean, there is an inherent conflict there, isn't there?
yeah, there is, and that's why we don't do it at
Oh, that's
Foundation.
why you don't do it. That's amazing to hear.
We don't think that we think that it creates too much of a muddies waters perspective, and not everybody believes that that's true, and we just think it creates too much complexity. We want customers to be excited about spending time with the companies we invest in or the companies we're evaluating, we believe that they'll get enough benefit from being early adopters of those companies. And then we also believe that if we connect customers with one another and we provide them with enough value, that will in itself be enough of a valuable point for those customers. I think a CISO is a close friend of mine and somebody I've known for over a decade. He made this great comment to me as a Fortune 500 CISO. He said, "Look, I spend time with you, Sid, because I feel like your focus on looking at new innovative ideas in cyber, that provides me more value than my Gartner subscription. And if you're Fortune 500, you're spending tens, if not hundreds of thousands of dollars
On
spending
Gartner
time with
subscriptions, yes.
exactly spending time with analysts." And he felt strongly that spending time with me and with the companies that I spend time with was more valuable than
Right.
Gartner. And he's not paying anything for it. We're not paying him anything, but he feels like he's getting enough back that it's worth his time.
Do you think there are others in that world that are there more cyber starts waiting to be exposed, or you feel like this? I'm asking the question is like, let me ask you to defend your category. That's a fairly normal thing. It's a fairly normal thing to have CISOs taking advisory board stakes and having a position in a lot of companies. I mean, they put them out in the press releases. Investors from XYZ, CISOs from these they've listed companies, and I have a lot of CISO friends like as well. That's like in this world, and I'm trying to understand: is it just ethically wrong? Is it just like the complication that you think? Do you think there's a legal thing there?
I don't want to speak on the legal side because I'm not a lawyer and it's hard to assess what's right and what's wrong. I think there's things that are fair to do, and then there are things that are gray. And I
Right,
think the things that are fair, the point you mentioned, Ryan, and CISOs investing in startups, candidly, as long as they can get approval, their company, I don't think that that's wrong. If they say that they want to invest their own money into a new startup when it's being formed, as long as they get approval from their companies, that's not wrong. I mean,
right.
that's one-off investments
Where
that
does
they're
it get
making.
gray?
I think where it gets great, I mean, obviously, what was revealed in the two CyberStarts articles, where you're getting carried interest in the funds, and that carried interest varies based on how you're interacting with the portfolio of
Earning points and then
companies,
yeah.
exactly the points. And I mean, that it's again, I from a legal standpoint, is it illegal? I don't know. Maybe
Right,
it's
right, right.
probably not, but it is on the gray area. And now I think the argument that CyberStarts would make, if I was Gilly and I was sitting with you, is I'd say, look, when I had folks evaluate that those documents, I told them two things. One, they don't have to take these points; they can just get involved with us. And I know many CISOs who are listed on the CyberStarts website, or previously were, because I know that they have removed a bunch of names, who never took those points. They chose not to sign the documents. So that option was always there from day
Okay.
zero. I think Gilly was very open about it. The second option, which was the points, also stated that you have pre-cleared this with your company. And there's no
Right,
way
right,
for
right.
CyberStarts to go and speak to the CEO of a public company and tell them, hey, your CISO is signing this document. Have you actually
Right. The responsibility is on them, right?
exactly. So I think that would be if I was Gilly and I was sitting down with you, that would be my comment. It would say, look, Ryan, I was not doing anything off board here. I was trying to be as upfront as possible. It wasn't a requirement to be part of my community. I was very clear in saying, you got to share this with your companies. This is not my job. There's no way for me to share this.
Right, right.
I think the one thing that both the articles didn't highlight was, look, there's a lot of blame to go to the CISOs too.
Yes, these are the
They
people I'm
chose
pointing the
they
fingers at. I'm not
they
blaming pointing the fingers at Gilly. He's running a
yeah,
business and he's finding a way to support his portfolio companies. And quite frankly, there's a lot of jealousy as well among a lot of VCs who wish
I,
that I could have had the kind of results that he's had. I mean,
I agree. And that was in the article too. I think in the Forbes article, I don't know if they interviewed him as part of the article, but there was a quote from him which said something like, look, when you reach this level of success,
you come at
you're
the
in the crosshairs. Yeah. You're in the crosshairs. And we've seen that in a sport, You see that happen?
Still a very murky world. And even the folks who didn't sign to carry their names around the website
Yeah.
associated with the other set of faces, it was just an ugly world. And I see my friends' faces up there and I'm like, why? It's
I
just
think
like,
that's the part that really bums me out. That's when, when at the beginning of this conversation, Ryan, you said like, hey, how do you feel? I feel really bad because I do think the revelations and the complexities that have been created by this and maybe even anything that comes out that's in the future, it makes us take a step backwards, right? In that CISOs, maybe they'll be a little bit more worried to interact with startups. Maybe startups will be a little bit more worried to interact with CISOs and advisory boards of their investors. It just, at the end of the day, it means that the incumbents, the larger public companies in cyber, end up winning in this
right.
scenario. And look, they're doing a whole bunch of things too. I mean, every major cybersecurity company sponsors a Formula One team. Why do they do that? Because they can take their customers to a Formula One event. Those
Yeah.
Formula One events, I think we don't talk about this, but a Paddock Club pass to watch the Vegas Grand Prix, which happened last
I was
weekend,
there.
is tens of thousands of dollars. Like, how is that different from Gili trying to give some carried interest? It's not. It's like
Or
that's the
you
part
equate
that's.
those, you equate all those boondoggle things the same along the lines of some. I don't agree with you there.
I do. I used to work in investment banking when I started my career, and I took the FINRA, the SEC exams. You have to take these exams to be officially being able to be in a broker dealer business. And one of the things you have to promise to do is not take a gift more than $100. You cannot do that.
Okay.
So A, you cannot take one, and B, you cannot give one. That's over $100.
Right. It's like the government. I mean, if you work for the
Yeah,
government, there are very,
exactly. It's
very
just like
strict
the
rules
government.
around.
And I think the Formula One event, spending tens of thousands of dollars to take a CISO out if they're signing a
You
multi-million
equate
dollar
it as the
endpoint,
same set of gray area
it's gray. It's
yeah.
gray area. It's not dramatically different. And so part of me is kind of looks at this and says, well, this is a bummer. And the reason it's a bummer is that unfortunately we're you know as an innovation from the innovation spectrum, we're losing out because CISOs maybe will be a little bit more worried to spend time with
Right.
startups, and that's a bummer.
And you think there's been like a negative trickle down effect on it, like you mentioned.
Not as much as you would think. So I think that the impact hasn't been as dramatic.
Okay.
It's not a good thing or a bad thing. It's just a fact. It's not like CISOs have automatically turned off. But I should also be open in saying I wasn't running the program, so I don't know.
Right.
Maybe at CyberStarts they have experienced a much more difficult event.
Do you have some time I can pick your brain on some cybersecurity things
Go
before
for
I
it.
let you go? Because I don't want this podcast to be about RSA Sandbox and Gili at all.
Yeah, let's do it. Yeah,
Quickly,
that'd be good.
when how do you get excited to make seed stage investments in these small tiny point products when platformization is winning the race? I see Nikesh and Palo Alto saying, listen, in 5 years point products will be no more. I see Satya raving about Microsoft revenue, platform driven revenue. Platformization is a real thing. A lot of vendors don't have the resources and tools to be able to resources and people and money to be able to manage all this set of tools. The idea is I'll go in one vendor and get everything. How do you, as a seed stage investor, get excited to get up and fund things when these things are all going to go away in 5 years?
I think you have to be an investor. You have to be a good venture investor, not just an investor. I think to invest at the earlier stages,
Because you're making wild, blind bets.
you have to be super positive. I mean, not blind. I think we spend a lot of time thinking about
When I
how to
look at
make.
some of these companies that you guys are funding, you are making blind bets, but go ahead.
I don't feel that way, but look, I think you have to be an optimist, and certainly I remain an optimist. And I think one of the things when you look at history has shown every time an incumbent comes in and says, "I built a platform, I will be the singular source." They've been wrong. I mean, let's just go back 10 years.
Palo Alto and Cisco are examples of like places where you can go and get everything from one vendor.
That's true. Neither of them. I mean, let's go and ask a CISO who is purely on the Palo stack. I don't know
Right.
of any.
There's a lot of folks in the Microsoft world only, though.
No, that's not true.
Okay.
There are lots of people who are Microsoft customers,
So you
Microsoft
don't believe
security customers.
platformization is a real thing?
Look, I have never seen an example. Not only do I not believe it, I have never seen an example of a single platform winning completely. And even if that happens, I mean, there's some cases of this happening. Amazon today is a single platform, and it's certainly the winner today in terms of delivery. You and I purchase most of our things from Amazon. Will that be true 5, 10 years from now? I don't know. Probably not. History has shown that every time there's a leader, an
Right.
incumbent, that incumbent ultimately ends up getting disrupted. I mean, the same could be true for
Cycle, right? Yeah.
Salesforce. Exactly. In sales and marketing, there was a view that Salesforce was the singular platform. And you can see today that there are competitors in that space, that Salesforce is feeling a declining kind of set of advantages that they used to have. And they're obviously they're fighting back.
Right.
If we go back another 10 years, Cisco and Juniper were the winners. I mean, Juniper today is a small little company. I mean, it's been
Right.
acquired by
Strong. Yeah.
HP. It's not really a, the name is significantly reduced. So and in security, I mean, Symantec, McAfee,
Right. Right.
Checkpoint.
Right. We've all been through these cycles of disruption, kind of
Exactly.
replaced by a CrowdStrike, and then there's another batch of disruption that
Exactly.
comes along. I agree with you there. But do you find that buyers are aware of like some of the hidden costs of going towards this platform model? Because we can't say platformization is not real and still not acknowledge that Microsoft is making $30 billion a year in just cybersecurity related revenues. It's real.
It's absolutely real. And I think buyers understand it. I think they're looking for more innovation. They're pushing us in the community to say, hey, show me something that's even better. And until something is better, I'm going to go and find the cheapest, the most comprehensive platform, and the one with the best support. When we look at email security, Mimecast and Proofpoint have owned those markets for 20 years with Microsoft Security, to your point on
Yeah.
Microsoft. And the reason for that is because folks haven't come up with better solutions. I think Abnormal Material are trying to go and do that, and there are a whole bunch of startups behind them. So it's not for lack of trying, but certainly so far, those three players, the incumbents, have maintained their status.
From an outsider and from a purist perspective, I'm going to ask this question. Do you feel that venture in cybersecurity is actually creating real innovation, or is there just a copycat scenario where every big VC has to have a stake in that particular category that's hot right now? I'll give you like Wiz as an example. Are we truly getting innovation from you guys, or are you guys just chasing categories that are hot, that are ripe for hyping so that you can get your exits? It's a blunt kind of purist question,
It's a
but
great
help me
question.
understand how you view it.
It's a great question. Obviously, I will take the counter view as
Mhm.
as a VC myself. As a venture community, have we made bad investments in the past? I mean, we have made, even just as a firm at Foundation. When I talk to my partners who are now retired, Mike Shu as an example, the person who made the investment in Netflix. If you went in and talked to him about some of the bad investments he's made over the years, there's lots of them. And I think as a category, do we make bad investments in cyber? 100%. But the bigger question, when you make it up, at the 50,000 foot level to venture, the counter argument is that, are we pushing the industry forward? Are we going in and investing in the next generation of founders who are coming and bringing new tooling and new infrastructure to these customers to try to stop the bad guys? I do believe that that's the case. Will on the way, will we make a bunch of mistakes and
Do you think we're
invest in
better
categories
off
that don't
today than we?
exist?
Do you think we're better off today than we were 3 years ago in terms of being able to protect against ransomware attacks? Like I'll tell you why I'm asking this question. Like I write for Security Week, and Security Week has this trending tagline that they put up: the top 8 stories of the week every week, and it's just week after week after week of in the wild exploits, zero-day attacks, edge devices being compromised, APT attacks against every company, ransomware ownage everywhere. And it's like all this money that's spent from the VC world, all this money that's spent on cybersecurity from buyers. Like we have spent billions and billions and billions of dollars. And it feels like everyone is owned, everyone is compromised, and it's kind of a sitting duck of looking around to see when the next big story will drop. Is that am I just too much of a pessimist looking at this?
I think so. I think to answer your first question, are we better off today than we were 3 years ago? I believe we are. I think there are attack surfaces. Cloud security is a great example. You brought up Wiz a couple times. There are attack surfaces that candidly we're not getting attention that have gotten a lot more attention. There's a lot more tooling around those attack surfaces than ever was before.
And I would argue that attack surfaces are expanding faster than you could even pretend to protect it.
Exactly.
Like there's so much code being created everywhere. It's like, how are we getting better? We're
I think you've highlighted the most important point, which is that unfortunately or fortunately, the way you look at it, in our industry, we're fighting against another group. And that other group are the threat actors. And that's a positive sign in that we all have a singular mission. There's very few other sectors in the markets where you and I can at least agree on one thing, which is that we don't want threat actors to win. And that's true across the board. I mean, you could hate your competitors, but at the end of the day, that piece, everybody knows that they're on the singular mission. And those threat actors are becoming more and more advanced, and they're seeing the value. And candidly, as more of our physical assets are moving to the digital world, the value of going and attacking the digital world has also gone up. So even though you're doing more innovation, you're unfortunately in an environment where everything else is also going up.
So
The
how
threat
are we
actors are
getting
going
better?
up. The value of the assets are going up. And look, I think the answer is that we are still seeing new innovation. We are finding new ways to prevent these threat actors. But you're absolutely right. The threat actors are rising just as fast, potentially faster in some years.
Without saying AI, without saying LLM, where are you seeing real, true, deep technical innovation?
I think there are always great founders going after great ideas. Maybe I'll rephrase the question and you tell me if that's okay.
It's
What are the
okay.
areas that I think are interesting or that I wish founders were spending more time in?
Yeah.
We talked about email. I think email needs more innovation. And I have a few different ways and potential avenues for how, but
You're
candidly, it's one
sprinkling
of
AI on it, though. I mean, you can't do anything without sprinkling some AI magic on it. And I'm asking you not to say AI
exactly, which
because
is why I'm not going to explain how I think we can innovate in email, but I do think that we can innovate in email. I think that there's an opportunity to go and innovate in email, and I do think we need it. And the way to assess that we need it is the fact that Proofpoint and Mimecast and Microsoft have owned that market for 20 years, and there has been limited innovation.
right.
So
But
I think those are
I can point to every category and say, look at IAM and SailPoint and these guys. Like that's an area that's
yeah,
even
but
more ripe for innovation.
let's pick IAM, right? I mean, Okta, ForgeRock. There's been one login. There's been a whole bunch of companies that have popped up since SailPoint. So actually think that IAM has seen lots of innovation. Not to say that that doesn't mean there's more
Nothing is
innovation.
fixed though, because we still have these identity-based attacks happening every day. And
100%.
Snowflake. I mean, it's like
You're absolutely right. But look, I think email, there's an opportunity there. I think pen testing, which has been a very human oriented approach, there's an opportunity to leverage software with that special word that you've asked me not to say. I
right.
think there's more innovation in AppSec that could come. And certainly we have these kind of incumbents that have been around for a while. And there's a whole bunch of new generation companies that are popping up.
Right.
I think the SOC, the Security Operations Center, will continue to see new innovation. We've seen a lot of innovation, but it's that area of security that is just so ripe for disruption. And then maybe the last thing I'd say is I've been thinking about what happens to the edge and the opportunity at the edge. I mean, certainly EDR has completely changed the world for us, but there's probably something else that's coming with that sprinkling of that word that you've asked me not to reference that I think the edge will be
And this is
impacted.
why I brought this up because I asked about true innovation. Is there real true innovation, any real true innovation happening without like some sort of dependence on some Gen AI, agentic AI, LLM thing? It feels like everyone is driving towards automation and we're not actually creating some new technology. We're trying to automate everything that already exists with this magic dust.
Yes and no. I mean, there's lots of like non-human identities. There's a whole bunch of new generation companies that have popped up. It has nothing to do with AI. I mean,
Okay.
there are lots of categories where there is very limited focus on AI. But I do think at the same time, when there's a major change in technology, cloud was a major change in technology. It completely changed the way that we deliver software to the world. AI is hopefully going to be a major change in technology. Every time there's one of these significant changes, everybody will be impacted. And I think
Right.
that the view that at least the Bay Area and Silicon Valley and the kind of tech ecosystem is making is that this is a significant change, and so everybody will adopt this. And look, we've been wrong in the Bay Area and in tech and in Silicon Valley a bunch of times, and maybe we're wrong on this one, but I think that's what makes this technology world so special. If you don't dare to try, you're not going to make any changes in the world.
All right, I'm going to let you out here at this. Do you remember the last security company that IPO'd?
I guess some would say rubric.
Exactly.
Yeah.
Exactly. Can you shed some light on what's happening in the capital markets? Usually venture and funding and valuations and so on follows what happens in the public markets. Public markets are kind of in a weird place where interest rates are high, but the markets are still going crazy. If I ask you to name 3 security companies that will eventually IPO in, let's say, the next 2 to 3 years, is that something you can easily identify?
It's a great question.
Who will IPO next? If I just put that to you, we having coffee, and I say, hey, gun to your head, who do you think IPOs next? Is it Wiz? Is it the natural pick?
I mean, Wiz should IPO if those numbers that they have shared publicly, the 500 million of
If it's
ARR,
accurate.
if it is true,
Why do
and
we have to say if it is true?
it's just it's so it's not that it's not that I don't think that it's true or not. It's just that it's such a crazy number that some of us, including me, look at it and say, "Hey, is that really true? That
Yeah.
seems amazing."
Or it seems magic.
Or it seems magic. But look, if that number is true, then they should go public.
Okay.
Arctic Wolf was closest to going public before the kind of the macro world changed. And I think they have a good chance at going public next.
Where's the macro world now?
It's much more positive. I mean, I think
You're
inflation is
bullish on the
significantly down.
election. You're bullish on the new administration being
I'm
pro.
it's very hard to assess with the new administration. I don't want to. It's hard to comment because it's just not clear what they want to do. I think they have made a few indications that have gotten the markets excited, and certainly the markets have taken it very positively.
Well, your category endorsed and kind of through its full
No,
support.
no, it's funny. There were a lot of people who were on the counter. I mean, there are countless names: Vinod Khosla, Reid Hoffman. There are countless folks who have been supporting the Democratic Party and Kamala Harris, and lost.
But we've had many examples of the VC world going in that direction. Like, there's a general bullish feeling that the new administration will be better.
I don't think
for
that's
business.
true. I mean,
Okay.
when I speak to the VCs, I mean, I'd say there were more VCs in the Bay Area who were pro Kamala Harris than were pro Donald Trump.
Okay.
And yes, you're absolutely right. There were a few folks who are very vocal.
The big folks, Andreessen. I mean, let's call names, right? I mean,
yeah, and if you remember, they actually said they were supporting Donald Trump, and then they retracted. They retracted their support. It was actually it's unclear on where they actually came on that situation and why they made that decision. My personal view is that this isn't an area that VCs should be involved. I mean, just we have enough stuff going on in our own world to also have a point of view on politics and try to endorse candidates or make a public statement. Just feels like an unnecessary. We're not experts, and it feels unnecessary to highlight these points. Actually, to answer your question on do I think that the new administration will make the US economy and the global economy better or worse, it's just very hard to assess because they have made so many different changes just in the last few weeks on what they're going to do, what they're not going to do. And historically, the administration has been pretty differentiated in their approaches. I think there's a few things that if they make those decisions, it could have a significant negative impact on technology. I mean, probably the most important one is immigration.
regulation is good for cybersecurity sales now. And when you have an administration that is less friendly towards regulation and less friendly towards, we're going to start to see a lot of this effects of reduced regulation on compliance things. I mean, I don't know how it shakes out, but I mean, regulation is good for enterprise security sales, don't you think?
I think it is. But at the same time, I mean, there's lots of Republican administrations where cyber has done enormously well. And I don't think that regulation alone creates more opportunity for cybersecurity companies. I think there's definitely subcategories of cyber that are more positively or negatively impacted by regulation.
Do you think the IPO markets open up in a year, 2 years, 5 years? Are we still kind of like in this holding pattern?
I think, I'd remain as a VC. I think you'll see this, right? I am always optimistic and many times wrong.
Oh, I'm always wrong, so I hope no one listens to me.
But I actually think that the markets will open up a lot sooner than many of us think. And Maybe that's even before we get to Christmas. Maybe there's, when we come back from Thanksgiving break, there's a couple more weeks. There may be a few issuances. I
What would be
certainly
the
think in
signs? What
Q1,
what what are what are some of the signs and the flags we should look for that tells us that things are
the more companies flip S1s to public, today you can file an S1 privately.
right,
When companies start flipping them to public, they have a set number of days before they can go before those S1s are kind of void and they have to go and resubmit them.
right?
And so it's a good indication that the company is ready to go public. And usually that'll happen within the next month or two of a company flipping to the public status.
Right. Post COVID, we went through this period where it was very, very difficult for later stage companies to raise, especially the ones, the unicorns and the ones with these crazy valuations. It became very, very difficult. Has that kind of stabilized? And how do you like what's going on in the M&A world? Is that where we'll start to see a lot of consolidation? I start to see Wiz doing some consolidation. We start to see some small deals starting to happen in the 500 million, $300 million range. Where are things?
It looks like they remain positive. I mean, the public markets are certainly up, and as a result, the valuations of these public stocks, Palo Alto Network, Zscaler, CrowdStrike, Sentinel One, has also gone up. And when the value of the business goes up, they're able to actually buy more things, leveraging their equity and the ability to issue more stock. And so we are already seeing a little bit of that happen. I mean, CrowdStrike just bought a company for $300 million, and I think we'll see more of those situations pop up.
Sid, thank you very much, man. Appreciate your candidness and your willingness to take all my tough, stupid questions. Appreciate the time.
Thanks for the time, Ryan. This was awesome.
Appreciate it.